Hello, and welcome to the first in a series of hopefully many videos explaining Forex markets and how to read charts, channels, Fibonacci, and all those things. Try to be simplified for you. Alright? And so here we go. As you can see here, what we have is the euro-dollar chart. This is the monthly chart. And a little bit of my background. Back a few years ago, I was on Wall Street. I was trained by a big-time currency trader. He taught me how to read charts and the like. And the way I like to look at the charts, to start out by looking at things on the largest overview as possible, from the bird's eye view, and that is the monthly view. So we're looking here at the euro dollar, and we're on the monthly chart. You see here's 2000, 2001, back around 9/11. This is really our nice bottom center point for us, from which we can determine where to read from, because this is a low point for many years. The way we pick channels is by finding the bottom lines, bottom points, and top points, and trying to connect as many of them as possible together to create a trend channel. And as you see this trend, as it keeps going up and up in this direction like this is the dollar as it's getting weaker. And what I like about the Forex market is that, as opposed to stocks where companies play games with their accounting and their statistics and all of that, with the Forex market, it's macroeconomics. It's the wealth of nations. It's global economics and things of that nature, which are used in determining what's going on. And we use two different aspects to figure out where the market's going. We use both technical and fundamental research. Technical research is reading of charts and seeing where the charts are going, and fundamental research is the news. And we tend to trade both. This market, the Forex market, which has got over, I don't know, like $3 trillion worth of money being played in it every day, is the most technical of markets, meaning that it has a lot of self-fulfilling prophecy in it. Most people who trade in this market are technicians. They're they're working for companies, or they're working on their own, and so therefore we're all looking at the same lines, and we're all following the same trend lines, and we're seeing the same things happening. So there's, like I said, a lot of self-fulfilling prophecy involved in this. Let me pause for here. Okay, so as you can see, as I said before, on the monthly chart, you can see this channel, how it's going, and how you see how it undulates up and down. Nothing moves in straight lines. Everything goes up and down. It's cyclical patterns, and things trade within boundaries, within ranges mostly. So you see how it's moving in this way. This is a dollar weakening, because it's the euro dollar means, for those of you who are new to Forex, it's how much the cost of a dollar, how much the cost of a euro is in dollars. So it's how much of the second pair of the pair it costs to purchase the first in the pair. So right now we're at $1.4105. Between each penny on the dollar is 100 pips, or points in percentage, and each penny basically is equal to $100. So each penny of movement that you're trading, you're potentially making $100 for each lot that you have on, and that's with size. We'll get to that maybe a little later in this video. We'll see. Let's go now to the weekly. So we see the overall trend. The big overview from the high in the sky is the dollar is weakening. It's crappening out, as we know from the news and what's going on in the market here. I'll stretch it out a little bit to expand it. Go the other way. Let me erase this other line that I had here, just to clear out things a little bit. I have a trade going at the moment, so I'm not going to delete that, because, hey, it's going. So you can see right here, it's touched down on this line here. You see over the last number of months it's hovering here, but the dollar had strengthened back since October of last year. And a lot of this strength had to do with, I think the Dow had come back a little bit, if I recall. Or maybe it was Europe and the rest of the world started weakening as well. But now the rest of the world has weakened. Their economies have weakened as well over the last number of months, and now the dollar is taking further losses and further weakening, as we see right up in here. So let's go now to the weekly chart. On the weekly chart, you see its expansion here. Let's drag this out. You can see we've had a double bottom over here on the weeklies on this same line, the same trend line right here. Bottom of this trend channel. This is the main channel. Now you see this leg right here that has been moving up. This is going up again, because again it's with the main trend, which is the weakening of the dollar, which is this upward movement. And it's at the bottom of the channel. So these kind of points right here are fantastic points to buy, to go long on the dollar, on the euro dollar, I should say. And let's stretch this out a little bit so you can see a little better. Now you can see, you see in the weekly here, you see how it's touched down here, and now we have this leg going up. So now this builds a little channel within itself, another channel. Channels within channels within channels. So now on the weekly, you see here it touched the bottom. Look how precise in some ways it is. It's pretty amazing. Touched right up here, top of this channel right here. So I drew a line between here, right here, would look like a good channel, and the bottom's here. Now we're over in here, and you can see how it's touching up against in here, all the way over to here. This is on the weekly. You see? These long candles, so there's big strength and movement in it. When it goes up, it shoots up like a rocket, because this is the overall trend. This is weakness, dollar weakness. Every time it goes up, that's dollar weakness. Coming down, dollar strength. You know? And so we see how this is stretching it, how this is playing out here. It's riding now at the bottom here. I just purchased. Okay, let's go over the daily now.